Hello and welcome back to the TheRockFXHub. I'm Peter, or as most of you know me, Peter the Rock. It's great to have you here once again as we continue this audiobook and video training series based on my book, Forex Trading Fundamentals, a complete beginner's guide. If you've been following along, by now you've learned how the Forex market works, how currencies are paired, and how different market sessions create trading opportunities across the globe. Now, in this next chapter, we begin to shift from understanding the market to reading the market. Welcome to Chapter 4, Charting and Price Action Basics. In this chapter, you'll learn how to read Forex charts, interpret market movements, and understand the language of price itself. Before you ever add an indicator or a trading system, you must learn to see what price is communicating. Because charts are where every trader's decision leaves a footprint. Here's what we'll be covering in this chapter. 1. Session 4.1, Understanding Forex Charts. We'll start with a foundation, what a Forex chart is, how to read it, and how time frames work together to reveal market structure. 2. Session 4.2, Types of Charts. Next, we'll look at the three main chart types: line charts, bar charts, and candlestick charts, and discuss what each can tell you about price behavior and market sentiment. 3. Session 4.3, What Price Action Tells Us. Finally, we'll explore the art of reading price movement without relying on indicators, understanding trends, momentum, and trader psychology through pure price action. By the end of this chapter, you'll be able to open any Forex chart and instantly identify whether the market is trending, consolidating, or preparing for a breakout. A vital skill for any serious trader. Before we get started, don't forget to subscribe to the TheRockFXHub, like this video, and share with others who are learning to trade. That way, you'll get notified the moment the next chapter. Chapter 5, Introduction to Technical Analysis, goes live. So, get comfortable, open your charts, and let's begin this exciting journey into how price tells a story. Welcome to Chapter 4, Charting and Price Action Basics. Chapter 4, Charting and Price Action Basics. 4.1, Understanding Forex Charts. Page 1. Charts are the visual language of the Forex market, the canvas on which price tells its story. A Forex chart plots currency prices over time, displaying how the market's collective decisions manifest in movements. Every candle, bar, or line represents an outcome of millions of buying and selling actions. At its core, a Forex chart answers three questions. 1. Where price has been, historical trend. 2. Where it is now, current rate. 3. How fast it's changing, momentum and volatility. The vertical axis, y-axis, shows price. The horizontal axis, x-axis, represents time. Traders adjust time frames from 1 minute to 1 month to analyze market behavior at different scales. Short-term traders prefer 1 to 15-minute charts, while swing traders use 4-hour or daily charts. Longer-term investors rely on weekly and monthly charts for macro perspective. Reading charts accurately means recognizing that each price point is more than a number. It reflects human perception of value at that moment. Understanding how to interpret these price changes gives you the foundation to analyze patterns, support / resistance, and trends later on. Professional traders rarely look for predictions in charts. Instead, they look for context. They study structure, where buyers and sellers entered, which levels defended, and where volatility compressed before expansion. Mastering chart reading is like learning to read market psychology in graphic form, an indispensable step towards skillful trading. Page 2. Most platforms let you choose from a variety of chart displays, customize colors, add indicators, and overlay multiple time frames. Yet, despite advanced software, success comes from interpretation, not decoration. Simplicity often reveals more truth than overloaded screens. Each price movement reflects an imbalance between supply and demand. When buyers dominate, price rises. When sellers take control, it falls. Studying these dynamics on a chart helps you anticipate continuation or reversal. Time frames align like nested lenses. Smaller charts show noise and detail. Higher charts show trend and structure. The golden rule: trade in the direction of the higher time frame trend. Time entries on the lower originates from this multi-time frame logic. A daily chart may define bias. An hourly or 15-minute chart offers entry precision. A well-read chart allows traders to make data-driven decisions instead of emotional ones. It's the foundation for risk management and strategy design. Before adding any indicators, the professional asks, what is price itself telling me? In the following section, we'll explore how charts visualize price, specifically line, bar, and candlestick types, and how each offers unique insights into trader behavior. 4.2 Types of charts. Page 3. There are 3 primary chart types used in Forex: line charts, bar charts, and candlestick charts. Each represents price differently, serving specific analytical purposes. Line charts connect closing prices over a chosen time frame, creating a smooth view of trend direction. They are excellent for beginners seeking clarity and for macro trend analysis, but lack detail on intraday movement. Bar charts show 4 data points per interval: open, high, low, and close, OHLC. The vertical line marks total price range, while horizontal ticks show open, left, and close, right. Bar charts reveal volatility and interbar sentiment, but can look complex. Candlestick charts, derived from 18th century Japanese rice trading, are the modern trader's favorite. Like bar charts, they show open, high, low, and close, but visualize sentiment more clearly through color. A bullish candle close open is often green or white. A bearish candle close open is red or black. Candlesticks form recognizable patterns: pin bars engulfing candles, dojis, that hint at reversals or continuation. While not guarantees, these formations provide context. Experienced traders blend candlestick reading with structure, support, resistance, trend lines, and volume. The key takeaway: choose one chart type that feels intuitive, learn it deeply, and avoid switching styles mid-analysis. Consistency builds pattern memory and improves decision accuracy. 4.3 What price action tells us. Page 4. Price action is the study of raw market movement without heavy reliance on technical indicators. It interprets a relationship between highs, lows, and closes to deduce who controls the market, buyers or sellers. Every chart, regardless of time frame, contains 3 essential elements: trend, structure, and momentum. 1. Trend, the general direction: higher highs equals uptrend, lower lows equals downtrend. 2. Structure, key price zones where reversals or consolidations occur. 3. Momentum, the speed and strength of moves between those zones. A price action trader watches how candles react at significant levels. For example, if price repeatedly fails to break below a support level, demand is defending that zone. When it finally breaks, it signals a potential shift in control. Indicators may confirm these observations, but price itself remains primary. Patterns such as breakouts, pullbacks, fakeouts, and consolidations repeat across time frames because human behavior, fear and greed, is constant. Practicing price action reading means observing charts daily, journaling reactions, and learn to sense when the market is impulsive versus corrective. Mastery doesn't come from memorizing patterns, but from internalizing how traders behave at those points. Page 5. Price action also teaches patience. Markets spend much of their time consolidating, trading sideways before breaking into trends. Recognizing these quiet phases helps traders conserve energy and capital. Volume and volatility expand as consolidation breaks. Candles lengthen, momentum accelerates. Observing this shift lets you enter early in new trends. Yet discipline is crucial. False breakouts, fake moves are common. Confirm continuation with a close beyond a level or retest. Combining price action with higher time frame context yields powerful insights. A bullish pin bar on the daily chart near long-term support carries more weight than the same pattern on a 5-minute chart. This multi-layer reading, macro first, micro second, is what professionals rely on. To summarize, charts visualize collective emotion, price action decodes it. Before adding indicators or algorithms, learn to interpret what the naked chart reveals. Price action literacy is your foundation for every trading system to come. In Chapter 5, we'll deepen this skill by exploring technical analysis fundamentals, the tools and methods that complement pure price observation. And that brings us to the end of Chapter 4, Charting and Price Action Basics, from the audiobook Forex Trading Fundamentals, a complete beginner's guide. In this chapter, we learn how to read and interpret Forex charts, the different chart types used by traders, and how to understand pure price action, the heartbeat of every market. You now know how to recognize trends, spot consolidations, and read candlesticks like a true market analyst. Remember, price is the ultimate truth of the market. Indicators may support your analysis, but it's the movement of price and how you interpret it that defines your success as a trader. Up next, we'll take your learning to the next level with Chapter 5, Introduction to Technical Analysis. This is where we'll begin applying tools, indicators, and techniques to strengthen your chart reading, confirm trends, and refine your entries and exits. If you've enjoyed learning about price action, you'll love what's coming next. This is where technical mastery begins. Before you go, don't forget to subscribe to the TheRockFXHub, like this video, and share with other traders who are growing in their Forex journey. Your support keeps this content going. And subscribing ensures you'll get notified the moment Chapter 5 goes live. Thank you so much for listening. I'm Peter the Rock, and I'll see you in the next chapter. Until then, stay disciplined, trade smart, and keep learning.